If you study markets, they always go in cycles. There's always an ebb and flow. And it's been, I think now we're in our 8th year of this quote unquote bull market, not only in the stock market, but also in the real estate market as a whole. And so it's not a question of if it's going to turn, it's just a question of when. And so we've gravitated towards an asset class that not only is continuing to provide great value for us in terms of cap rates and returns, but also, in our opinion, is recession-proof.
You're listening to Freedom Fastlane, presented by Capitalism.com. This is the show about building businesses and investing the profits so that you can live life on your terms. And now your host, the future owner of the Cleveland Indians, Ryan Daniel Moran.
Hey Fastlaners, Ryan here, and I wanted to take a second and brag on one of our Backroom members. Our Backroom is our mastermind. Really, we're focused on getting to $10 million in top-line revenue, and I wanted to brag on Athletic Greens. They're in the Backroom, and they have just absolutely killed it. Not only with expanding their sales, but really by making incredible frickin' products. So the products were made out of need by the founders, and as a result, they've been featured on Tim Ferriss. They were featured in the 4-Hour Body, and you've probably seen them all over the web. The reason why I'm telling you about them today is because I want to support them by encouraging you to go over to athleticgreens.com/Amazon. Obviously, you know that I am really big on maximizing your Amazon presence, and I also just really believe in the product. So, for example, I like to wake up in the morning, put my greens in a water bottle, add in some creatine. Sometimes I add in a fat burner if I'm on a cut, shake it up, and that's sometimes my morning pick-me-up. If you've ever heard me talk about my Tribe 5, I have 5 habits that I practice on a daily basis. My B point every day is getting to the gym and having my greens. And when I don't have time for a big salad or making a smoothie, I supplement with Athletic Greens. So I'd highly encourage you to support them. Head over to athleticgreens.com/Amazon and give their 30-day packs a try. All right, let's head into the episode. I don't like paying taxes. And what most people don't know is that there are things that produce cash flow while also reducing the amount of taxes that you pay. I did not know that there were certain opportunities available to me as an investor that gave me the best of both worlds. And I wish someone had told me about that. And I learned that from Mauricio in the last year. So I asked him to recap how investors can participate in getting passive cash flow while actually, at the same time, reducing the amount of taxes that they would pay. What's up, Fastlaners? Ryan Daniel Moran here. You might have heard me say in the past that I believe the fast lane to financial freedom is to build a business and invest the profits. And also, it's not cash that makes you free, it's cash flow that makes you free. And we're going to be hitting that today with the savage of cash flow, Mauricio Rauld, the cash flow savage. So we're here in Costa Rica at one of our Backroom events. The Backroom is our mastermind. We are growing to 10 million and beyond. A lot of our members get together and sell their businesses. Sometimes we do roll-ups because when you partner businesses together, you increase their valuation, which allows them to get more money for the exact same business. And then we have a different set of problems. The different set of problems is when you get all this cash from either running a successful business or selling your company, what do you do in order to create cash flow? Because when I sold one of my companies, one of my family members was like, well, what are you gonna do for cash flow now? And it never occurred to me because I was like, well, I'm gonna have all this cash in the bank. So what does replace that check? It seems like a silly question because there's all this money in the bank, but as science has taught us that predictable cash flow is what actually makes us feel free to pursue the things that we want. I just sexied up that science, but I know that entrepreneurs, once they get a pile of cash and it just sits there, it does not make them feel liberated to pursue the things that they want. You've worked with some of the most successful entrepreneurs in the world. The Rich Dad advisors have you as their advisor when it comes to structures of their businesses. So what have you seen or what have you observed in entrepreneurs in regards to cash flow versus just cash or net worth and how they manage both?
Yeah, it's a great question. I mean, we talked a little bit about it today in the back room that, when I think of a pile of cash, I don't think of a pile of cash. I think of what that cash generates in cash flow. So the example we gave today is if I have $1 million in the bank, I don't think of it as $1 million. I think of it as $80,000 a year or $100,000 a year, depending on what type of return you can make it. And that's an important mind shift because to me, the path to financial freedom is that cash flow, is getting enough cash flow coming in every month to cover your expenses, to make you free so that you don't have to work. Doesn't mean you don't work. You actually get to do what you love. But that's the key to financial freedom, is to accumulate enough cash, as you always say, get that cash from your business, right? Reinvest some of those profits into your business, but then have a portion of that cash go to some type of investments. I always say pay yourself first. That's kind of the big thing for me. Pay yourself first, invest that money for cash flow so that you get to a stage where you no longer have to work anymore because you're getting that cash flow every month.
What I have found is that as soon as that predictable cash flow is indeed predictable, now I feel like I'm comfortable enough to take some strategic risks in my business that actually build the long-term business that I want to have. Otherwise, we tend to opportunity seek. So entrepreneurs who don't yet feel fully secure because they don't have an investment strategy, because they don't have predictable cash flow, they tend to grasp at quarters instead of pursuing dollars or $10 bills, which is ultimately what our business should be. Our businesses should be compounding. And then we put that cash into places that is going to bring friends back predictably so that we're comfortable enough to build the type of business that we want. So that's always been my approach. I know you have famously said on the Freedom Fastlane podcast that you are agnostic in terms of the form or the source of the cash flow.
That's right.
Would you reiterate how you said that?
We are asset agnostic, meaning other than we don't like Wall Street, so we're really into alternative assets, right? So we don't invest in Wall Street, we don't invest in stocks, bonds, mutual funds, kind of what most people do. But whether it's multifamily homes or single family, or what we're doing right now, which is mobile home parks, or whether it's assisted living facilities or whatever, we don't have we can go either direction. Right now, we feel that some of those asset classes are overvalued and overpriced. We feel, oddly enough, that mobile home parks is where the best value is today. But if in 5 years or however long this sweetness is going to last, we will pivot and we'll go to where the opportunity is, as long as it's not Wall Street.
And what do you do to prepare yourself to be able to take advantage of opportunities as they're available? Meaning, most people say, I'm in the business of this asset class versus I'm just going to pursue cash flow wherever that cash flow is and then pay out my investors so investors have a predictable return. So what do you do inside of the business to be able to take advantage of the opportunities when the opportunities present themselves?
Well, first, obviously you need to be aware. You need to be paying attention to what's going on in the market. You've got to just consume the information. So there's a reason why we think that multifamily is overvalued. It's just not just a guess. We hang around with some pretty smart people and a lot of multifamily investors, and they're telling us it's overpriced, and there's reasons for it. Right now, there's a lot of private equity firms that are going in there, pension funds that are going in there that don't necessarily care too much about the returns. They care about the return of their capital. And so if they end up getting a 2 or 3% return, they're happy. So that's kind of the last phase of a bubble, or when it's going to go down. And so it's just about educating. And then obviously once we find an opportunity, we build teams. I mean, we have an entire acquisitions team on our group, in our team. And that's all they do is they source deals, and once we've identified the asset class, that's what they do.
So my opinion, I don't know if you would consider me a professional investor as much as that's just part of my strategy is to invest for cash flow. But my opinion, based on my experience, has been that when the market is high, like it is at the time of this recording, it's stupid. Not just unwise, but stupid for me to go out and try to be a real estate investor right now, because there are other people whose full-time business is to be going out and getting deals before I find them.
Right.
And when the market is down and all of the money is scared, that's the time that I want to be an investor. So the strategy for me is when times are really good to go trust people who are always on the lookout for those sources of cash flow and give my money to them rather than try to spend my own money on a business that I'm not an expert in.
Right.
When you buy at the bottom, any idiot can make money. So even I can make money
right.
during an economic recession if I buy at the bottom.
Right.
When things are at the top, it's stupid for me to do anything else than to partner with the people who are good at this, who have people always pounding the pavement looking for deals, and then take advantage of some of the profit share that's going to come from that. What's your
Well, we talked a little bit about it today as well. I mean, a lot of folks here have physical products businesses, and they're always looking for, that's their edge, right? They know that business they can make money. If they went outside of that into real estate, they feel like they've lost that edge. That's all we do is real estate, and our whole team is built around finding and sourcing deals. I mean, we spent the last 12 to 18 months building out our team, and we finally gotten to the point where we feel comfortable that we're now in full acquisition mode. But having that team in place is so key, and it just takes time to build that team, and it's just a lot easier for investors that are looking for passive investments to go ahead and trust that team as opposed to learning something new and spending those couple of years building that team and that knowledge.
What asset, since you look at anything that isn't Wall Street, what asset classes do you keep an ear to the floor on? I mean, right now you're all in on mobile homes, but what other asset classes do you pay attention to?
Yeah, I mean, we're always looking at multifamily. I mean, long term, it's an amazing investment. It just happens to be at that peak, in our opinion. So once that thing starts coming down, well, that's definitely on our radar. I'm a big fan of assisted living facilities, which is basically providing elderly folks with care as they get older. And with the whole demographic shift and the population getting older, I think that's just a tremendous opportunity. The issue for me is that involves buying single-family homes that you then turn into these facilities for doing that. And the single-family homes are, in my opinion, overpriced. So again, once that turn happens, and we don't know when it's going to happen, but it's going to happen, and I think it's going to be pretty severe, then that's where I think we'll pivot and go into some of those asset classes, like going back to the single-family homes and then also the multifamily.
Anyone can make money in a bull market, and everyone's an investment expert when things are going really well. I think it takes a strategic thinker to think ahead enough to say, what's going to happen when the tish hits the fan? How is my investment going to be protected when things aren't so great? When things are really good, I get a little bit nervous about where I invest my cash. And I want to know what the game plan looks like if things don't continue to go how they've been going for the last few years. So as an investor and someone who pursues cash flow, I asked Mauricio to talk about what their investment plan was if things started to go down. And his answer really surprised me because it showed that they were thinking about what a down cycle might look like. He had some scary predictions about what might happen, but he had a process that gave me a bit of a braingasm of how to think about investing in the case of a down cycle. And here's what he had to say. So as a company that specializes in cash flow investments, two questions. One, why do you think that there might be a correction later? And two, what do you do to set yourself up to be ready to take advantage of those opportunities? Because once again, as a casual investor or a part-time investor, I'm probably going to be on the late end of those types of investments. But as a full-time investor and a group of investors that is always looking at the market, you're probably going to have a leg up on those types of opportunities. So what gives you the insight or the perspective that you think it's going to be a severe correction when it happens? And two, what do you do as a company to take advantage of those?
Well, first of all, there will be a correction. I mean, there's no doubt about it. The question is just when and how severe. If you study markets, they're always go in cycles. There's always an ebb and flow. And it's been, I think now we're in our 8th year of this quote unquote bull market, not only in the stock market, but also in the real estate market as a whole. And so it's not a question of if it's going to turn, it's just a question of when. And so that's why we certainly wouldn't be in the stock market now. But even, like I said, some of these other multifamilies, it's just not the time to be in there. And so we've gravitated towards an asset class that not only is continuing to provide great value for us in terms of cap rates and returns, but also, in our opinion, we talked about it on the podcast, it's recession-proof because it is mobile home parks and mobile homes. It's unfortunate, but they are at the lower end of the spectrum. And so once you get below mobile home parks and mobile home communities, you're either living in your car or you're homeless. There's nowhere else to go. And so what happens in a correction or in a severe recession is you'll see that all of the people who are playing up at the top, they get pushed down to the B level, that get pushed down to the C level and to the D level. But once you're already at the bottom, again, there's not much place to go. And so that's why traditionally, if you look at how mobile home parks have done during the Great Recession and other turns, they're not as impacted as the more overpriced, A-type assets.
If there is a correction, or when there is a correction. But how many cycles have you seen in your lifetime? Because we're in kind of uncharted territory in the sense of this bull market, this boom has been going on for way too long, it seems, and interest rates are still super low. I've only lived through 2 economic cycles in my memory. And so part of my brain is like, maybe we just blasted through the cycle. Maybe we just blasted through the downturn and we're just in another bull market. I don't know. So can you really confidently say that?
I can confidently say. I do feel a little bit like a dinosaur in the group today because everybody's so young, and including yourself. But you don't have to live through the cycle. You can study, right? You can study history. You can see the cycles, and they're on average about 7 years. Now, I agree with you that we're living in some unique terms. We've never been in an environment where interest rates have been zero, and this monetary policy which has been out of control, but that, to me, that even fuels more fire. It just means to me like that when we do get that correction, we're just basically kicking this thing down the can. So the more of these policies that are in place, it just means we're kind of keeping this thing afloat artificially a little bit higher, so that when it actually does go down, it's going to go down a little bit harder than most people would like to believe.
And how, in your experience, my reference point for a down cycle is a dot-com boom in the Great Recession.
That's right.
So, how bad in your experience? And I know we're speculating.
We're totally speculating. I mean, I think our next turn is going to be potentially as bad as the Great Recession. I don't want to put percentages on it, but I think you're looking at something that's just as bad as it was before. But even if not, even if you don't even get close to that, and it's half of that, or 3/4, you get close to that, it's a pretty significant down. I don't think it's going to be a soft recession. I don't think it's going to be a soft landing, soft recession where things go down 10% or 15%. I think it's going to be a severe downturn.
Okay. I have retired from the prediction game of the economy because I've been wrong for a long time. Sure. So instead, I just try to make good decisions moving forward because I really don't know what's going to happen. So based on that, what is compelling to me and what the braingasm I'm having right now is the temptation for most people right now, especially private equity groups and a lot of the dumb money, the cheap money that is coming in, is to go settle for poorer returns. So whereas most people are used to getting 1% per month in real estate, now, since asset prices are so high, they're getting more like 4, 5, 6% if they're lucky. In Austin, if you get a 5% return, it's like, woo, we're doing great. So most people are chasing fewer and fewer dollars. What you've done is said, what model is going to continue to give us returns in this market and will give us even better returns in a down market? So it's kind of recession, at least recession insulated. If there's a recession, it might actually be really good for you. And if things go up, it's going to be good for you either way. So you win in that case.
Right.
So that's what's interesting to me. And I'm just curious if that is a result of pursuing cash flow as your guiding light, or if you keep the overall macroeconomic view in your decision-making process. What gave you the perspective to pursue the mobile home, at least right now, the greatest opportunity that you have right now, rather than following the rest of the dumb money?
Well, to us, it's all about value creation. And that's one of the reasons we can provide the type of returns we do to our investors, is because we create an immense amount of value with our asset. We can do that with mobile home parks. We can't do that right now with the other asset classes. And so at some point that's going to happen and we'll be able to create more value there. But with mobile home parks, the cap rates are still there. So the cash flow just continues to come in, and the demand is so high and the supply is not there. And so it's almost like this perfect storm.
What do you mean the demand is there, but the supply is not? The demand of what?
The demand for mobile home parks and affordable housing in general has been skyrocketing over the past few years. I mean, I don't know if that many people know, but half of Americans live on less than $600 a week. Okay, that's not something we typically think about, but that's the reality. And so there's a lot of folks that just can't afford a $800 one-bedroom apartment. They're forced to be at the mobile home park, and that number is just increasing. I mean, things are going worse for the lower.
I'm sorry to interrupt, but what just happened? What I'm just realizing is, as rent prices we're having a big boom right now, and I think that's mostly artificially stimulated. It's my opinion.
Mine too.
But because of that, rent prices and mortgage prices are going up and up and up, which is squeezing the middle class out of that. So they would have to move down.
That's right.
They would have to move down in where they live. Mm-hmm. And we see that in places like Austin and San Francisco, where people can't even afford the tax payment to live in nice areas. So they're moving their standard of living is actually going down. And then you have, if there is a downturn, then you just increase the number of people who are pulled into lower standards of living, which is why being in the low housing cost market is kind of recession-proof. I just got that, I guess, for the first time, realizing of why that is the case.
And we don't have to wait for a downturn, because even today, even though things are going well for a lot of people, if you look at the statistics on wages, I mean, the wages aren't keeping up with the inflation rate. And so people are still not, they're kind of getting left behind. And so even today, the demand for affordable houses is going up, because everybody else, all these prices are going up, all the rents are going up. They can't afford those rents. They're forced to go either down or stay down. And so that's an unfortunate situation, but that's why we feel it's recession. I call it recession-proof. Maybe it's recession-resistant, whatever you want to call it. But certainly on a downturn, these individuals, hardworking Americans, can't afford a certain level of payment. And so as a result, the rent payments on a mobile home community, they haven't been going up like apartments have, or the single family homes, because they can't afford it. So you can only charge as much as your tenants can afford, and they're in a tough situation. And so they can't afford more than whatever they're paying. And so they haven't gone crazily up, and so they're not going to come crazy down. And there's obviously going to be more added. But in addition to that, they're not building more mobile home parks. Right? There's a stigma to it. The communities don't want to have mobile home parks in their communities. And so you would expect with this demand, and I want to call it an explosive demand, but it's certainly an increased demand for mobile home and affordable housing, you don't see that corresponding supply of homes that you would expect in a typical economy.
Every investment book that I have ever read has read like a how-to guide on how to invest in certain assets or sources of cash flow yourself. And when I work with entrepreneurs, they often feel like they have their business and they're going to take their profits and start an entirely new business that invests in real estate or whatever investment that they're excited about. No one told me that there were opportunities to just partner with other businesses that specialized in certain sources of cash flow so I could participate in the benefits of that investment without actually having to be active in that business. I wish someone had told me that these types of opportunities were available. So I asked Mauricio to talk about how funds were structured, how investors partner with these types of businesses, and where it might fit into an entrepreneur's and an investor's portfolio. Here's what we discussed. So let's make this super practical and actionable for those of you who are desiring cash flow, because what I want entrepreneurs and high achievers to know is that these types of funds exist and can be a part of your portfolio. And full disclosure, these types of funds, including Mauricio's fund, are a major focus of my portfolio. In fact, I think I have more allocated for cash flow funds than anything else in my portfolio. So this is something I believe in. This is something that, if you look at my balance sheet, I have a significant amount of interest in. So full disclosure, I invest very heavily in these types of funds. So I don't think most people think about putting their money with businesses that are funds that pay out their investors as their primary way of investing, because when you think about investing in real estate, you think about doing it yourself. That's what most people think about.
Right.
Or if you think about investing in really any asset class, the temptation, especially for entrepreneurs, is to say, I'm going to go out and learn how to do this. And so we go down these rabbit holes of, oh, that's a good idea. Your business looks pretty good. So I'm going to pursue this. So how does it actually look to invest in one of these funds? Because obviously you don't take investor cash and pay out investors unless you're making a profit.
Right.
And you like an asset class is only as good as the businesses that are in it, because behind every investment is a business. So how does it actually look from the investor and business perspective of when someone gets involved in an investment?
When someone gets involved in one of our funds or a fund in general, the first thing to keep in mind, it is 100% passive. So you're not in a situation where you are having to do any of the work. You know, and a lot of businesses want to roll up their sleeves and get involved in the decision making and stuff. That is what we're there. We're there to do. So it's a passive investment. You essentially do your due diligence on the front end, which is key. Just making sure that that we're legit, and whatever investment you're going to make, you want to make sure you do your due diligence first. But once you're done with the due diligence, you essentially invest in the deal, which you're investing alongside other people and ourselves. We think of our investors as partners, and you're getting a monthly. We call it mailbox money, but it's literally a monthly check. These days it's an ACH wire, but it's just a monthly check that comes in every single month that you don't have to worry about, so that you can then focus on building your empire, whatever business you're involved in.
And why are you able to do that? Meaning, like, why is the fund, whether it's you or somebody else, able to pay out a predictable rate of return?
Yep, great. Two reasons. One, again, mobile home parks right now are cash cows, so there's plenty of cash to go around, even on the monthly staying. But where we really, I think, differentiate ourselves a little bit from other mobile home park funds or investments is that we focus on acquiring sort of the distressed properties. We have a construction company, we have a property management company that's nationwide, and so we're able to go in and acquire mobile home parks that are 30, 40, 50% occupied, that the current the current owners don't want to deal with, don't have the capital to improve them. Just they're a lot of times legacy owners. And so we're able to take these parks and turn them around pretty quickly. And so we create an immense amount of value on those parks. And so upon exit, that's really where we really get paid on the back end, because we've hopefully created so much value to the park, increase the value of the park, that we can then extract through a refinance or even a sale, a tremendous amount of value on the back end. So it's all about value creation for us. And so we're happy to pay out 10, 12%, because obviously we're making more than that on the back end.
Yeah, makes sense. So to be clear, this is not a startup. Like, you're not raising money to scale a business. Like, you and your partners have been in this for quite some time.
We're actually a top 100 owner-operator in the U.S. I mean, we've scaled it pretty quickly. We've been doing this for 3 years now, but we went basically from 0 to top 100 in the last 3 years. So we're not one of the smaller players, but we're basically in the mobile home park industry is very fragmented, and so we're basically, the way I view it, we're in the process of consolidating that fragmentation, and so we're just acquiring, and we want to move up pretty quickly and get to top 5 here in the next 3 to 5 years.
When you were on the Freedom Fastlane podcast, I asked you this question, and I want to bring something back, which was ultimately what sold me on being an investor with this team, is that you have quite a resume of people who call you an advisor and people that you know, and you had a pretty nice, cushy life living in Belize with your family.
Right.
And then you decided to give that up to pursue a big vision that you believed in. What was it about this structure or this direction that made you say, all right, I'll leave the beach.
Right.
and come to Scottsdale and build out this vision.
Yep, I am an attorney by trade, so I had a relatively successful law practice, and I did syndication. Which is essentially what we're doing now on the other end, which is I helped clients pool resources, pool money to go invest in real estate.
And that's how we met, because somebody said I should contact you about putting together syndication to buy the Cleveland Indians.
That's right. And so that's what I did for 15 years. I helped raise over $120 million for my clients. And again, I was part of that team. I was a small part, the legal part of the team, and I was doing fairly well. I was obviously getting compensated nicely for my work, but I certainly wasn't doing as well as my clients were doing, because they were the ones doing the work, adding the value, creating that value for not only themselves but for their investors. I just at some point I just said I want to be on the other side of the table. Like, it's time for me to do that. Joining Andrew, who's our founder and CEO over at Four Peaks Capital Partners. He already had the team and he was doing what I wanted to do, and so I decided to basically give up that life and move back to the States and join a real team, because I was basically a solopreneur. And again, I was having a nice life and a great living, but there's only so much I could scale that to. And like I said on the podcast, I don't have the goals of owning the Cleveland Indians or the New York Jets, but I've got some pretty lofty goals myself, and I just couldn't see how I was going to get there doing what I was doing. Now that we can help other investors do what we're doing, that's going to allow us to get where we want to go as well.
I want to ask you about taxes. I don't like talking about taxes, but I do like talking about avoiding taxes.
Okay.
And I don't like paying them, Mauricio. I've always heard and known that real estate is one of the better vehicles as far as reducing your tax burden. Yep. What I didn't know until recently is that if you're part of a syndication or fund, that some of those tax benefits pass on to the investors. I did not know that was a thing until within the last 6 months.
Sure.
So would you share that insight?
Sure, and just full disclosure, I'm not a tax attorney or a CPA or anything, but I do spend quite a bit of time with tax folks. Obviously, when I was practicing as an attorney, and one of my good friends is actually Tom Wheelwright, who runs Provision, one of Rich Dad's advisors, and happens to be my CPA and also the company CPA,
and a speaker at the Capitalism conference.
That's right. He's going to be at CapCon, so that's going to be great. So Tom, so we just ran it by him because I think you mentioned at some point you had your doubts, and I said I was pretty sure that was the way it is. Look, real estate has all these great depreciation benefits, and those depreciation benefits flow through all of whatever companies and funds you put together. It flows through to the ultimate owners, and the ultimate owners are the investors and ourselves as the sponsor. And so any depreciation that, because the funds are set up as an equity, this is not a debt fund, right? It's not a promissory note. It's not a loan. You're actually a co-owner with us and the other investors. So all that depreciation that happens at the mobile home park level, or if it's a multifamily even, will flow up through the entities up to your personal tax return, and you get that same benefit than you would as if you invested directly in the asset itself.
And so that return of 11 or 12% in normal taxable dollars might actually be like 14.
Yeah, I mean, I think the easiest way, and I know I didn't do a great job on the podcast of explaining, but essentially what it really looks like is if you're getting a 10% return, let's just use easy numbers, and let's say you're getting $10,000 a year as your return. Well, on paper, you might only be making $6,000 or $7,000.
Yeah.
So you're pocketing the 10 grand, but when it's time to file your taxes, you're only showing $6,000 or $7,000 as your income, and so therefore you're paying much lower taxes. And it's just because you've got dirt and you've got land and you've got improvements that you get to essentially claim they're losing value every year, even though we all know in reality it's increasing in value, but from a tax perspective, it's treated as it's losing value over time. And with mobile home parks, a lot of those tax benefits are actually accelerated because we have things like roads and fences and lightings. You can actually depreciate those at a faster rate than a traditional building that would take you 27. You would depreciate it over a longer time frame. When you're depreciating a road, for example, the time frame is much lower.
And that is what ultimately sold me on this type of structure, knowing that I could be a passive receiver of cash flow, but on my tax returns show that I am actively depreciating costs.
Right.
That is,
yep.
That is heaven for someone like me.
That's one of the nice things about using structures like limited liability companies, not to get too technical, but with LLCs, they're basically pass-through entities. And so all the profit, losses, depreciation pass through that entity. It almost disappears and then ends up in the personal tax returns of whoever the owner is through what's called a K-1, but that's ultimately how it gets reflected.
So I believe the fast lane to financial freedom is to build a business, invest the profits into other forms of cash flow. And in my experience, by making that money and putting it in a place that I'm going to get a predictable return frees me up to grow the business even more, and then take the cash flow and put it back to more areas and then it compounds over time. And if you run those numbers over 10 years, it's almost frightening what it can look like. Your business is the real estate piece, right? Is being involved in this business. Where are you investing your profits?
We actually invest our profits back into mobile homes. I mean, right now we believe in what we're doing, that we take our own money and we put it into we buy mobile home parks. I mean, that's I mean, I wouldn't be in that business if I didn't believe in it. So that's where you're not going to find me putting money in Wall Street. Let's put it that way. So it goes back into the mobile home parks.
Well, I wanted to have you here because I really believe. I know so many entrepreneurs who are good at making money and so bad at keeping it or investing it. And ultimately, I think most of us get into this game because we want freedom. Right. Ultimately, we want to get into this game because we want to have more security, more peace of mind, and we want to be able to pursue the things that we want. And I think we often overlook the value that businesses bring to the world. And the value that this business brings to the world is you're actually freeing up entrepreneurs to be able to pursue the things that they believe in, because this is one of the sources that they can consider for creating that predictable cash flow. So I think you are changing lives all over the place, and I believe in what you're doing, Mauricio.
Thank you, sir.
Thanks for
Appreciate
hanging out
it.
with us.
Thank you for having us.
If you're a freedom seeker like myself, please share this with somebody you know who is an entrepreneur, who is really good at making the money and not so good at investing it, because there are solutions that exist. And one of the things that I discovered on my route to financial freedom was all of the roads for cash flow were about how to do it yourself, learn a whole new skill, learn a whole new business, rather than all the other opportunities that actually exist so that you can just grow your business, take your cash, put it into places where you will be freed up so that you can continue to focus on growing your business. And I didn't think that there was a good voice or a good representation of those opportunities. And it now is the greatest allocation of my portfolio so that I can continue to grow my businesses while my cash flow comes in from these other sources. So this is something I believe in, something that I personally invest in, and I feel like entrepreneurs should know more about it. So please share this with an entrepreneur that you know that needs this information. Thanks so much for watching. We'll see you on the next episode. Thanks, Mauricio.
Thanks.
Hey, Fastlaners, Ryan Daniel Moran here, and if you've been listening to me for any length of time, you know that it's really important to me to deconstruct the how-to behind extraordinary results. It fascinates me to find out how some people grow $100 million companies or billion-dollar companies or invest for wealth and cash flow. And I am all about deconstructing that how-to piece so that we can pass it on to you, and also so that I can benefit from being able to implement those same strategies. Every December, I assemble people who have done extraordinary things, like built billion-dollar companies, or who have avoided excess taxation, or have built a company overnight, and I put them on stage at a year-end event, and we deconstruct the habits that have made them successful. We used to call it Freedom Fastlane Live. Now we call it the Capitalism Conference. And this year, we've invited a different set of speakers than you would normally see at a business seminar or conference, because we've only invited people who have been the actual builders of something great. So, you might not recognize their names, but you will absolutely recognize what they have done. So if you want the playbook to building a billion-dollar company, you will get it at the Capitalism Conference. If you want the playbook to investing for long-term wealth and cash flow while protecting your downside risk, or having infinite upside, you will get that at the Capitalism Conference. If you want the playbook to building an A-player team of people who will build your company to the level that you desire, you will get it at the Capitalism Conference. And I'm telling you all of this because, as I record this, tickets for the Capitalism Conference just went on sale. Now, I know that there are a ton of conferences that you could go to, and you can't go to all of them. Plus, we have our event in December, which means that it's right before holiday season, but it's also the last time that you can get a write-off before the end of the year. But I believe, and I think that you have seen this, that things are changing really quickly. Cryptocurrency has the potential to disrupt everything. Amazon.com is changing. It's going into retail. More competitors are entering the market. Private equity groups are changing the way that they invest. And we're sitting at a time right now where looking at the economy and looking at certain strategic investments mean a lot more than they have in the past. Because of all of these changes, it's more important than ever that you are surrounded in an environment and a network of people who are on the same path and have done what you want to do in the past and are coming back with decades of experience to show you the way. You're going to get that at the Capitalism Conference because the Capitalism Conference is the only place where people who have actually done it and are actively doing it come back and share their experience and deconstruct the how-to behind their success. The how-to to building real companies, the how-to to going from 0 to 8 or 9 figures in a short amount of time, and the how-to take advantage of all of these coming changes that are on the horizon for entrepreneurs. You and I both know that people who take advantage of massive changes get filthy rich as a result of being on the cutting edge, while everyone who tries to get in later gets slaughtered because they get in too late and they miss the opportunities. At the Capitalism Conference, we're going to go into these changes and we're going to talk about how to use them in your business. You're also going to stay light years ahead of your competitors because you're going to be finding out about different ways to market your products and services, position your businesses, and grow in a way that your competitors are not currently doing. But ultimately, events are about the people that you meet. And because of the way we do things at the Capitalism Conference, we tend to attract a very specific type of person. We attract entrepreneurs with a big vision. We attract investors who are forward thinking. And we attract a higher level person with deeper pockets. So as a result of coming to the Capitalism Conference, yes, you'll leave with the playbook to building a bigger company and growing your business faster. But even more importantly, you'll expand your Rolodex with people who want to invest in your next startup, join you in the building of the vision you have for your company, or who have a vision for bigger success than most, if not all, of the other groups, masterminds, and conferences where everyone else is hanging out. And as a result, you'll be running alongside people who have the same big vision as you of doing something great. That just tends to be the nature of the type of people that we attract to the Capitalism Conference, and you will be in good company when you come hang out with them this December in Austin, Texas, when you attend the event. It's this December 7th, 8th, and 9th in Austin, and you will walk away with the playbook for extraordinary success in business, life, and investing. And you'll walk away with a new set of contacts and potential partners who will support you along the way. This is the thing that I am most proud of that we do here at Capitalism.com and Freedom Fastlane. It's also the hardest thing we do, the most expensive thing we do, the least profitable thing that we do, but it is the thing that I enjoy and am most proud of that we do here. And I want you to be there this December in Austin. I want to hang out, shake your hand, introduce you to the people that we have on stage. And if you're an Elite Access member, I want you to join me backstage when I actually introduce you to the people who are keynoting and speaking at the event. This year, we're doing a couple things differently, including doing strategic hands-on breakouts that allow you to interact in a more intimate setting and get specific help on your business so that you'll leave with a clear set of action items that are going to have you cruising into 2018 and be ahead of everybody else. Tickets are now open and you can get them at thecapitalismconference.com. Please note that we've already pre-sold a few hundred tickets as a result of doing a blind, super early bird sale earlier this year. This is the first time that we're going public with the sale of tickets. And since this is our third year doing it, we've proven that we actually have a reputation for this, so we have more interest than we have ever had. We have increased capacity, but not by a ton, so I'm encouraging you to book the time on your calendar now and grab a ticket at thecapitalismconference.com. I can't wait to see you there. This is always a huge up level for every entrepreneur who walks through the door, and you'll be going into 2018 with a bigger vision, more momentum, more support, and a clear idea of how you are going to kill it over the next 12 months. Can't wait to see you there. Head to thecapitalismconference.com to grab your ticket, and we'll be hanging out this December. See you there.